Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 10th of January 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. But bear in mind that we recorded this video mid-morning in London. In fact, it's around 10 to 11 here in London as I speak. And so we've had a good couple of hours of the London session to consider as well. What have we seen? Well, we've seen a pullback as far as euro, dollar and cable are concerned. Both the euro and the pound sterling giving ground against the US dollar. Against the trend really that we've seen over the course of the week, but continuing its own trend, the Australian dollar up by another 0.25% against its US peer, and as I say, continuing that strong upward momentum, trading at 71.8770 shortly before we recorded the video. There's also no end to the love affair. I think we can describe it as around the Brazilian real. Again, the real taking money off of the US dollar, a further 0.88% to the good, and continuing that strong monthly and weekly trend that we've seen since the resumption of the new year. Dollar index for its part is up on the day, trading up at 95.31, up by around 0.1%. But let's not forget that we did test down to 95 in overnight trade. And my concern is that my thought patterns are, will dollar index continue to trend lower over the medium term, or will it form a base at 95 and rally from there? My suspicion is there's further weakness to come. Okay, what's on the calendar then? Events that may move the markets today. A fairly compact calendar today. We've already had some interesting data out. We've had like-for-like retail sales out of the UK for December at midnight last night. We've also had inflation data out of China, and we'll have a look at the PPI element of that a little bit later on. Again, that was data for the month of December. Bank of England Credit Conditions Survey report was also released earlier this morning at 9:30 GMT, and to come we shall have the ECB monetary policy meeting accounts, a chance to look at the state of the ECB balance sheet and perhaps discern how they may deploy their reinvestment opportunities. They've got 15 billion euros a month to spend in the markets, despite ending QE, just purely because of the size of their current holdings and the coupons and maturities in that. At 13:30 we shall have continuing and initial jobless claims data, weekly data this of course, out of the USA, and that follows hard on the heels of last Friday's bumper non-farm payrolls data. At the same time, at 13:30 over the border in Canada, we shall have new house price index data for November, both month on month and year on year. And then we take a break until 1700 and then we get the meat on the bones as far as today's calendar is concerned, with another speech from the Fed's Jerome Powell. Of course, he was speaking last Friday, wasn't he, in the afternoon, and that helped to drive US equity markets higher. Will he have anything to add to those comments, and will he influence the market in a similar fashion? At 21:30 we'll have AIG performance of construction index data out of Australia for December. Construction in Australia has been a thorn in the RBA side, and one of the things perhaps that's been holding them back from raising rates. And at 21:45 we'll also have building permits data, this time out of New Zealand, and month on month data this for the month of November. And then at 22:30 the second of the Fed big guns, Vice Chair Richard, an FOMC member, Richard Clarida, speaking then at 22:30. So again, the markets will be paying attention. And finally, at 23:30, an hour later, we shall have overall household spending data out of Japan. Year-over-year measures these for the month of November, and a look really at the health of the Japanese consumer and saving and household ratios there. Household spending ratios, I should say. Okay, breaking news and comment then that's caught my eye over the last 24 hours. First of all, French industrial production has fallen in November by a whopping 1.3% versus forecast for a fall of just 0.6%. So a big miss there as far as that data is concerned. Meanwhile, in China, factory gate inflation slowed, if I can say that, to just 0.9% in December versus 2.7% in November, and a forecast for growth of 1.6%. So cooling inflation in China perhaps is the takeaway from that figure. A string of large UK retailers have reported weak holiday sales. That comes on the back of those disappointing retail sales, official retail sales data. And Ford and Jaguar Land Rover have both announced job cuts in Europe amid a sharp slowdown in the global autos industry market, or global auto industry or market, I should say, the teeth in. Okay, food for thought, something to take away with you into the trading day and beyond. Why not think about this? As the US government shutdown continues, ratings agency Fitch has warned that it could cut its AAA debt rating on the US borrowings, which could further increase rising US borrowing costs and add to a growing debt and debt service burden. Obviously, lower rated paper, the market demands a higher coupon, a higher yield to lend money to the US government, and there's already some concern about the scale of outstanding US debt. Once again, we're heading towards the debt ceiling and the ever increasing burden on the economy of servicing that debt. And so a rise in borrowing costs will be the last thing really that the US markets could do with right now. Okay, time to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take a moment, please, as ever, to read this risk warning thoroughly. Thank you for your time today.